Hello guys, as usual, today we will make another live. Instead of making a video today, I want to do a live. So this live, it's not always, but just whenever I am ready to talk into a live session. So the subject of today is why trends are different. Understand that when you see trends, it means when the stock is going up or even when the stock is going down, it will make a graph or a trend. And this trend, when you see it, you will find that stocks are different. Okay? Every stock is different. Now you ask yourself first, why we have so many different trends and why some trends are very, very long. A trend can stay, let's say, 1 year and a half, 2 years, depending on the years. Sometimes we have good years where most of the stocks are doing so good. Like when I showed you the Dow Jones. Hello, Cheaper. Thank you for coming to this live. I don't use moving averages. Maybe you will be surprised. I don't use them. I have my own criteria that I use in order to see the stocks when they move or when I want to buy. I have my own criteria. So I don't use moving averages. Okay? Moving averages are the average of the closing price for whatever days are, 50 days or 200 days or whatever they say. So whenever you add another day or you subtract the line or this moving average changes. So whenever it is changed, why should I use it? It means if I use it, for example, 200 days, I find a line. If it is 50 days, I find a line. If I use 100 days, I find another line. So it is confusing. It's not exact and it gives nothing. So just the people, because they use it, it doesn't mean that it is useful. It's just an indicator as the other indicators. They are lagging in these indicators. They don't give no future, no indication of whatsoever. Okay? So, and most of the time, these guys who are using moving averages, most of the time they are investors or they just want to see if the market is moving up a little bit when they want to buy. But for us, we are swing traders. It means we follow the trends. We don't follow any stock like this. If the stock doesn't trend, we don't look at it. Okay? So if the stock will be going up, so you said, Cheaper said, so you don't use any indicators. No. The only real indicators that I use are the resistance line, the support line, and my own criteria. This is the most thing I am using. I don't use anything else. So if you, for example, Cheaper, you want to see how many indicators we have in the market. We have more than 300 indicators. Indicator, it is just a strategy made by a trader or investor before. Okay? You can make an indicator and publish it. And if the people, most of the time, the broker, they have it in their charts, that's it. It doesn't mean that it is indicator is better than other indicator, because all of them are just small strategies that they don't work always the right thing. Hello, wise men, how are you? So Wiseman, this is today also. I want just to make a live video session and not to do a video, okay, just for today. So it's not, it should not be a habit that each day I will do a live video, but I'm trying. If I have time, I'm just trying. When I have nothing to do, I just meet my students and my followers or subscribers or anyone else who is coming, and we just discuss things about stocks, trends, and prices. Now, the subject of today is why trends are different. It means a lot of people, they see the trend and they don't understand why there is a trend with 6 months and the stock is going good, and then we have another stock is going only 2 or 3 days or 5 days, and then the trend disappear. Okay, so, and even if you look at the trends from one stock to another stock, you will find that they are so different. The differences are so big that you can see that these stocks are not the same. Okay, so this is the subject of today. So if you have more questions, you can ask, and then we can just describe. Hello, Sami Caprio from Chicago. Good evening, and how are you? Let's see this question from Cheaper. Do you have an opinion on trading companies that let you use their money? Can you explain more? What do you mean by trading companies? Do you mean the brokers? A broker that lends you the money in order that you trade? If it is a broker that lends money, yes, we have what we call margin account. If you have a margin account, let's say you put $5,000, so Cheaper, you trade futures with their money. Now, there is no company that gives your money without you have money. Because who risks the money? Do you think that a company gives you money and then you trade? What if you lose? Who pays them? It means, do you think it's free? No. It doesn't exist, these companies. But there are companies who they ask you to have some money, and then they give you money to trade with. They know that you lose, so your account will be wiped out, and then you are in debt. You should pay them. That's what's going on in the market, and it is just to attract people who have a problem with money, but they have some money. If you have, for example, you must pay monthly. No. See, Cheaper, can you give me an example of these companies that you see? If it is broker, you can give me the name and we can look at it. There is no one which gives you the money without you risk the money. It means even if someone gives you the money, it means it is at your own risk. It's not their risk. Let's say you have $10,000 and they give you $90,000. Give me So I just go to it, to this, and I find it says a PR fund has been blasted several times for cheating traders. Now I will not go through this, and I will tell you why. See, understand this thing. Cheaper. Understand one thing. I will just go and just explain to you with something that you should understand. These are called proprietary trading, or most of them. So I will show you how do they work. So let's just go with the explanation. Okay. Now, most of these are called proprietary trading or brokers. Okay? Now, what did they say? They say, we give you money to trade. Okay? Now, the most important thing you ask is, this is the most important thing, risk. Who risk the money? Is it you or is it them? Them, it means these brokers. Understand that a proprietary trader, a proprietary, okay, a proprietary brokers will never risk money. It is you that you risk money. Now, what they ask you to get a training. Sometimes they ask you thousands of dollars to take their training in order that you be accepted. It's just a trick. It is just a trick. Okay? If you pay for your training, so what they do, they sell you this training. They sell you the training first. Now, this is the most important thing. They sell you a training, okay? And you risk your money. So, let's say, for example, they ask you, oh, okay, in order to begin, just an example, okay? In order to begin, you should open an account with us, okay? First, you are dealing with business with them, with this broker. So you become what? A customer. Okay? This is the first thing. You open an account. Open an account, because they don't give you money if you are working with other brokers. Open account. It means that you are a customer. Now, second thing, let's say they ask you to put 10% of the money. Let's say you put 10K and they give you, let's say, $90,000. Just an example, okay? $90,000. So, 3, what will happen? Now, when you want to trade, you are using 100,000. 100,000K. But the risk, try to understand this. The risk, who risk their money? It is you. It is this 10%. They will do a lot of stuff not to get to their money, which is 90,000. So let's say you go to futures. Futures is so difficult because it is for professional people. It's not for the amateur to come and to do this, because your 10,000 could be wiped out in a few minutes. Now, they try to not go over 10,000 that you put. So 5, when you finish your 10,000, you lose your 10,000, they will stop you. That's how do they take their money. So this is what we call proprietary trading, and this is what you are talking about this. Ask them the same questions I ask here when I say 10,000 or 5,000 or 10% or 5%. This can differ from broker to broker, okay? And if they ask you to train you, check if it is free training, not you pay. Don't pay anything. If they ask you to pay, it means they are selling you something. And understand the most important thing I want to tell you. Do you think that proprietary brokers, they don't find professional people who have been in the market very long to make money, and they go to you who are an amateur? It means a beginner. They give you $90,000. Why should they give you money? Because, okay, this is in general what will happen. Because for me, I contacted them before, not those but others. I contacted them. The first thing I want to see to understand is risk, because I am a trader and I'm trading for many years. If I want to trade for them, they should ask me. I should ask them who takes the risk. If you say you take the risk, and you take 90% of the profit, okay? Why should I do this? Why I shouldn't go with a margin account? Let's say you have 10,000. The broker give you 10,000. Now, if you use it daily, you don't pay nothing. If you are day trader. So there is no interest rate. So why you don't go and use your margin account and do day trading? You pay nothing, you give them nothing, and you risk your own money with their money, but at least you pay nothing. Okay? So these are just tricks, and don't be tricked with these brokers, because a broker doesn't trade. I'm telling you many times. Those people who don't understand, a broker, his money comes from fees and commission. He doesn't trade, because trading for him is taking risk. So brokers are companies that avoid risk. They don't want to do risk for themselves, but they let the other people take risk. So this is in general. This is in the general explanation. Okay, so cheaper. I'm not saying nothing. Any company, any broker, those are brokers. They are not a charity people. Have you ever gone to a church or to some place and they give you $90,000 or $100,000 and they say, "Oh, okay, man, just go and trade with it. It's all for you"? No, it is not. Ask them who takes the risk. They will tell you, you take the risk. It's not them. No, it's like when you borrow money from your friend or your family or whatever, or okay, it's like this. But in brokers are there not to take risk. Now, why did they give you so much money? For what? Okay? They tell you, no, it is just you take 90% or 80%, or they say 60% of the profit, and all the other money is for you. But they understand that you have no chance to make money because you are a beginner. And you go to futures. Be careful, be careful, be careful. Never go to three things. I'm telling you. I will just put this into paper, just to explanation. If someone tells you when you are a beginner, okay, you are a beginner, you just begin to trade, okay, there are three things. Never trade them. Never trade these things. First, forex, options, and the most dangerous is futures. Why I told you don't go to them? Because they are leveraged things. Leveraged, it means when something moves, it will be so fast in moving. Futures, options, or forex, for example, options, let's say you put $100,000 in a stock, options, let's say calls, you buy, let's say you have, you like this stock and there is earning news, and you put 100,000 calls, you think that the stock will go up, and then tomorrow the stock goes down. So do you know what will happen to your 100,000? Maybe it will disappear, because when it goes many dollars down, this call doesn't exist anymore. It doesn't exist, because this call is related to a strike, and this strike, if it doesn't exist, this strike in the chain, it doesn't exist anymore, because this stock has gone from 70, let's say, to 50. So from 70 to 50, if the strike is, let's say the strike is 71 or 68 or something like that, these numbers doesn't exist anymore. So your strike will be zero. So your $100,000 that you put is zero now. So your account will be wiped out, and maybe you have. Now, these are the three things. Understand that when you are a beginner, you don't understand how do they move, how this forex move. It is $1.50. You buy it with $1.50, you spend $200, $300, but if it moves just a little bit, your 200 or 300 becomes zero. The same as options, the same as futures. Futures are more dangerous because these things are only for professional traders. Even the brokers will stop you. So there is something in futures. I will just let you know. Now, in the futures, when you begin to lose money, okay, let's say you buy something at $12, an E-mini, for example, which is a contract. Let's say if it goes to $11 and all your money, let's say you put $2,000, and this is wiped out. So the broker will stop you before you reach the 2,000, because